This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by...
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
Banks under fire again. Why some are questioning whether the world's largest financial institutions are artificially inflating the price of everything, from beer cans to cars to airplanes.
How safe is your pension? Detroit isn't the only employer that made big promises to current and retired workers. Across the country, many are now looking very closely at their own financial futures.
And how to not outlive your money. How much cash can retirees safely pull from their savings each year? And does that 4% rule still work? Our special series starts tonight. We have all that and more on Nightly Business Report for Monday, July 22nd.
Good evening, everyone, and welcome. It is the heart of earnings season. Nearly 1/3 of all of the S&P 500 companies report their latest quarterly profits and losses this week, including 8 members of the Dow. And today, the first of those 8 blue chips reported, and shareholders are forgiven if they feel like they've eaten a soggy French fry. McDonald's, the world's biggest burger chain, saw profits rise 4% over the past 3 months, but that was well short of analysts' expectations, and the company warned of a tough year ahead due to shaky economic conditions all over the globe. McDonald's shares, the biggest decliners in the Dow today, falling more than 2.5%, and that took some steam out of the major averages.
Well, that led to a cautious day on Wall Street, with investors waiting to see more results from this week's batch of earnings. The major stock averages posted modest gains, but still enough that the S&P 500 index closed at a fresh all-time high. The Dow rose almost 2 points, the Nasdaq up more than 12.5, and the S&P up 3.5 points, and as we said, its new record, 1695. In the commodity markets, gold was glittering. The precious metal chalked up its biggest one-day gain in more than a year, as a weaker U.S. dollar lifted the price to the highest close in 5 weeks, jumping more than $43 an ounce to $13.36.
Also increasing today, gasoline prices. AAA says average prices at the pump up 12 cents a gallon nationwide over the past week. Increased summer demand, unrest in the Middle East, and production disruptions at refineries here in the U.S. all combined for that sudden spike. And AAA says even higher prices will be here in the coming weeks.
Existing home sales fell more than 1% in the month of June, but the median home price rose to $214,000. That's up 13% year over year. And while the sector has been on fire on Wall Street, it hasn't been everywhere on Main Street. Diana Oluk looks at what some see as a great divide in housing.
Dad gets lots of carrots.
David and Heather Littlejohn built their Oregon home in 2005 at the height of the housing boom.
We're underwater because our timing is outstanding.
The value of their home was cut in half by the housing crisis.
Good stuff.
As their family grows, so too does their need for more space. So they're now adding extra principal to their monthly mortgage payment.
We're doing what we can to dig our way out of the hole the old-fashioned way.
They thought about walking away.
I think just from a character standpoint, that's not an option for us.
As the Littlejohns dig, the stocks of the nation's big home builders soar, up over 200% from their bottom in the spring of 2009. Even with housing starts still well below normal levels, Wall Street is buying into the builders.
I think we're in nirvana for housing.
Do you really?
I think that I have to tell you, I'm probably the most bullish I've ever been.
I still feel buying a home is the best investment any individual can make.
But about 10 million underwater borrowers and millions more in a near negative equity position don't have that option. And every day, David Littlejohn, a financial planner, watches Wall Street beaming all the way from Oregon.
I have a bit of animosity toward the way the situation was handled at times. I do think that the taxpayer bailed out a lot of these banks. I'm a taxpayer. In many respects, I've honored my contract the entire time through, and I look at it and go, well, wait a second here. why am I left with my nose against the glass? Why don't I get the puppy?
And it's not just underwater borrowers, it's first-time home buyers. They usually make up around 40 to 45% of the market. Today, they're at just 29%. High prices and tight lending are keeping many of them on the sidelines. For Nightly Business Report, I'm Diana Olick in Washington.
Some of the very same banks that have profited so handsomely from the housing rebound have also made tens of millions by warehousing physical commodities like aluminum and copper. Some industry critics charge that some of the firms routinely engage in shell game-style maneuvers that line the bank's pockets and boost costs for end users like soda drinkers and car buyers. Mary Thompson has the story.
Bottlenecks of a different kind pushing up the price of a cold one these days, or at least the cost of keeping it cold. It's a long-held belief among some industries, bank-controlled warehouses intentionally delay aluminum deliveries, pushing prices of the metal higher even as demand has declined. Aluminum users point to the steady increase in the metal's price since 2009, when banks began buying the warehouses, while Jorge Vasquez, managing director of Harbor Aluminum Intelligence, points to a premium on the metal that's well above its historic average of 2.5 to 6 cents a pound.
That premium was trading 2 weeks ago at a record high of 13 cents per pound.
The Beer Institute estimates this costs firms that use aluminum to make everything from airplanes to autos to beer cans an additional $3.6 billion each year. At the heart of the issue, Detroit's Metro International, an aluminum warehouse controlled by Goldman Sachs. It holds the equivalent of a quarter of the annual North American demand for the metal, but only offloads or distributes a required minimum of 3,000 tons a day. No more, no less, whatever the demand. Goldman profits from this practice two ways. First, from the extended rents paid to store the metal, and second, by the bets made on aluminum futures by its trading arm. Goldman disputes it intentionally distorts prices, saying only 5% of aluminum used in production of consumer goods is warehoused. But Vasquez counters it does, given the amount of metal held by Metro International. The concerns about higher prices catching regulators' eye, the Federal Reserve publicly acknowledging an ongoing review to see if commodity activities are complementary and permissible for bank holding companies, while the CFTC's launched an investigation into warehouse practices. All of this setting the stage for Tuesday's Senate hearing on whether or not banks should control commodities-related businesses like oil refineries, power plants, and metals warehouses. For Nightly Business Report, I'm Mary Thompson.
San Jose, California, the heart of Silicon Valley, has a lot of worries these days. $20 million in pension reforms for city workers approved by voters there just last year have now found their way into a courtroom. Current city workers are fighting to block the measures and keep San Jose from taking more of their paychecks to pay for future pension costs.
Meantime, after the city of Detroit filed for bankruptcy protection last week, municipal workers there are fighting to keep their pensions intact. The lawsuits have started flying, and retirees claim their pensions are protected by Michigan's Constitution. Scott Cohn is in Detroit with a look at how firefighters are battling to keep what they thought was theirs.
On the streets of Detroit, firefighters staged informational pickets trying to save their city pensions.
We are not numbers. We are people that sacrifice our lives. We may not come home one day. So to look at us as a spreadsheet is, to me, un-American.
The real battle, though, is in the courts. This county judge in Michigan has ruled the bankruptcy violates a provision in the state constitution protecting pensions. But the bankruptcy is filed in federal court, and the judge in that case, Stephen Rhodes, declared today that the feds have jurisdiction. Over objections from the city pension funds, Rhodes set a hearing in the case for Wednesday morning. It's the beginning of a process that could take years, far more complex for a city, the experts say, than for even the biggest corporate bankruptcy.
They can't sell their assets and go away. They need to continue to exist for the population, for its constituents, et cetera. So in this case, that's going to make it difficult because you have stakeholders,
including those picketing firefighters who insist there's a basic principle at stake, not to mention their financial well-being.
Absolutely, I'm nervous. My family is nervous. We will survive. We will do what we have to do to survive. But I think that We have been promised something, and this country is based on good faith and promise, an American way, an American dream. If you get rid of unions and pensions, what do we have? We have pure corporate privatization and control. That's not America.
Michigan's governor says the retirees should have a voice in the bankruptcy process, and formalizing that will be one of the first orders of business in court. But the unions say the time for negotiation was before the bankruptcy, maybe to head it off in the first place. For Nightly Business Report, I'm Scott Cohn in Detroit.
So how safe is your pension? Karen Friedman is the Executive Vice President and Policy Director at the Pension Rights Center. Ms. Friedman, welcome. Good to have you with us. On a scale of 1 to 10, how safe are America's pensions? And are municipal pensions any more dangerous or less safe than corporate pensions?
Well, I'd say it depends. It's hard to give a scale. There are definitely some issues. Let me start by saying we think it's absolutely outrageous that Detroit filed for bankruptcy in order to get rid of their pension obligations. That is a broken promise to workers and retirees. Having said that, if you're in a company pension, it's a little bit different than a government pension. If you're in a company pension, and let's say your company goes bankrupt, your pension would be backed by a federal insurance program called the Pension Benefit Guaranty Corporation. And in most situations, especially for retirees, your benefits will be insured and you don't have to worry too much. If you're in a state pension, let me say there's a few myths around state plans. Most state plans are well funded. I just want to say that. There are a few bad apples, and most of those bad apples are because state legislators made a decision not to adequately fund those plans. Also, most state laws and municipal laws prohibit pensions from being cut. So from that perspective, people have less to worry about, but because of Detroit, there are some dangerous things going on.
Karen, let's get back to Detroit, because I was very struck by that last gentleman in the package who was saying that, America's all about good faith. It's just that's the American way. Is that going to play out in this fight in Detroit to get pension money? How do you think it's all going to work out in the end?
Well, this is what I think. I think that the fight is just beginning. Workers and retirees are going to be on the ground fighting this, and I think that the last measure should be retiree cuts. Every other alternative should be explored before there are any retiree cuts. So I think this is going to go on for a long while. We hope that this issue in Detroit is going to be resolved favorably for workers and retirees. We think it sets an extremely dangerous precedent, and we hope this does not spread to any other cities.
What kind of homework can I do to find out whether my pension, whether it is a state, municipal one, or a corporate one, what kind of homework can I do? Who can I ask? What do I ask to find out whether mine is safe?
Well, that's a really good question. In the corporate sector, if you have a company pension plan, then the plan is required to give you a statement every year telling you how well funded the plan is. That's a place to start. Look at it. If you have questions, go to an independent actuary, one of the math whizzes who helps people in these situations, or go to your plan administrator. In the states, I would say start with your state legislators. As I said before, most pension plans on the state level are doing really well. But go to your state legislators and tell them, this pension is so important to me, I don't want it cut, I want to know that you are funding it. And that's the first place you should start.
All right, Karen, thank you very much. Karen Friedman of the Pension Rights Center.
And still ahead on the program, Netflix shares have soared almost 200% over the past year. We'll tell you why they were under pressure late today. But first, let's take a look at how the international markets closed today. A troubling and still developing story at a Six Flags amusement park in Arlington, Texas. An investigation has been launched over the death of a woman who fell from a 14-story roller coaster on Friday. Jackie DeAngelis has our story.
13 stories high with a drop of more than 79 degrees, the Texas Giant is a main attraction at Six Flags Arlington Park. But Friday evening, a tragic accident left a woman dead after she fell from the ride. Accidents like this raise many concerns over safety at theme parks, but the International Association of Amusement Parks and Attractions says the likelihood of being seriously injured on a ride is 1 in 24 million.
To be seriously injured at a theme park is fairly uncommon based on the raw volume numbers of people who visit parks.
Meantime, Six Flags went ahead with its scheduled earnings report this morning.
We join this call today with heavy hearts. As you may already have heard, one of our guests died last Friday in an accident at our park in Arlington, Texas. And we've been here throughout the weekend to support our team as we work through this tragic event.
But now analysts are looking forward, concerned about the chilling effect that an accident like this could have on attendance for Six Flags and other theme park operators.
We don't really see much of an impact from this going forward. We think the company is doing a good job addressing the situation.
Six Flags says it has not seen a significant impact in attendance over the weekend from this accident, but warns that sometimes there could be a lag.
I think there'll be a drop in attendance.
I hate roller coasters. I don't let my kids go on them anymore. I'm probably going to be more hesitant now to go on a roller coaster.
Some people may have a second thought about going to these facilities.
We did adjust our numbers for the third quarter slightly. We were expecting roughly 6% growth for the quarter in attendance. We think it's more like 5% now, but that's just, again, be cautious of some potential impact and spillover for the next 2 months.
A Six Flags spokeswoman commented on the accident, saying, "We are committed to determining the cause of this tragic accident and will utilize every resource throughout this process."
The Arlington police have ruled out foul play and criminality. Six Flags will continue the investigation as Texas is one of the 21 states that has no agency to oversee amusement park accidents. That raises the question of whether more regulation might be imposed on parks and if they'll have to invest in safety.
From a media and marketing messaging perspective, they're going to have to spend some money to remind folks that these rides are safe.
For Nightly Business Report, I'm Jackie DeAngelis.
We begin Market Focus tonight with a late-day earnings report. Netflix profits beat street estimates, but the company was cautious about the next quarter, and its forecast for subscriber growth wasn't as strong as some had expected. So the stock finished the day lower by about 1% to $261.96, and it fell further after hours. Hasbro missed earnings expectations. The reason, more boys are playing with electronics devices than with traditional action figures. The company also announced an agreement with Disney to extend its merchandising right to Marvel characters. And that may have helped lift the stock, which closed up more than 3% to $46.87.
Shares of Yahoo fell sharply today after hedge fund manager Dan Loeb disclosed plans to sell 2/3 of his stake in the company. His firm, Third Point, will still own about 20 million shares. Loeb also said he'll resign from Yahoo's board of directors. As for the stock, it finished the day at $27.86. That was down more than 4%. And Google is taking a stake in the Taiwanese microchip maker that makes the chips used in its Google Glass device. Google Glass is a computing device worn on your face with a small screen above one eye. The investment sent shares of Himax Technologies soaring more than 30% to $6.74. Google closed up 1.5% to $910.70.
And still ahead, a tricky calculation. How much should you withdraw from your savings each year in retirement? We'll put the time-honored 4% rule to the test as we kick off our week-long series, How to Not Outlive Your Money. But first, let's look at commodities, treasuries, and currencies today. No matter how your investments are doing, the biggest fear for many facing or in retirement is the possibility of outliving your savings. To make sure retirees have enough money, some financial advisors have relied on a rule that says that their nest egg should last a lifetime as long as they withdraw no more than 4% a year. But now some say the old 4% rule could put your retirement at risk. Sharon Epperson has more.
It may seem like a fairly safe bet.
Withdraw no more than 4% from your retirement savings each year, and you'll have enough money to last the rest of your life. Well, not so fast.
You know, I don't think the 4% rule is as feasible today as it was in the past. And the reason for that is because the market returns haven't been as consistent as we've seen in the past.
The 4% rule was calculated back in the 1990s, based on a portfolio with a mix of 60% large cap stocks and 40% intermediate term government bonds. But times have changed. With historically low bond yields and a volatile stock market, the 4% rule may no longer be as safe. Getting a handle on cash flow in retirement is more important than any rule, many financial advisors say. Knowing what you'll be spending is the best way to determine what you'll need to withdraw. But financial advisor Doug Lockwood says it is possible for retirees to take out 4% a year from savings and have the money last, as long as the mix of assets is well diversified.
You have to look at not only interest rates and bond rates that you can draw upon, but where am I getting my income from my equities? And at that point, you have to look at dividend-paying stocks to grab that equity yield.
Depending on your age and risk tolerance, Lockwood says a 4% withdrawal rate is a good guideline for gauging whether you'll have enough money in retirement. But also consider taxes and inflation.
With inflation and taxes, that investor who wants to draw 4% has to be able to make at least 7% on average to be able to net, get that 4% in their pocket. Well, that can be challenging at times. And I find that a lot of folks are just not invested appropriately to be able to address that type of need.
Many pre-retirees also simply need to save more, Lockwood says. In the end, how much money you put in may be the biggest factor in determining how much you can take out. For Nightly Business Report, I'm Sharon Epperson.
For more on how much to withdraw during retirement, we're joined by Carrie Carbonaro. She's financial advisor with United Capital Private Wealth Management. Carrie, thanks for joining us. Let me just begin by asking you, where do you stand on this 4% rule? Does it still work or doesn't it?
I believe that the 4% rule is a valid point, but there is no one-size-fits-all when it comes to financial planning. So for clients, they really need to know, more importantly, what they save, what they spend, how much they're going to leave to their heirs, when they're going to retire, and what their risk tolerance is. And those are more important than how much they're going to take out of the account.
So if it's not 4%, Carrie, it has to be an individual calculation based on some of the things you just mentioned there, like how much you've saved, how much you're going to spend, and I would think significantly how much money you're going to have coming in from other sources like pensions, Social Security, or retirement annuities, right?
Absolutely. It all factors in. You have all your different buckets of money. You have your taxable money and your non-taxable money. And one of the things you have to do is obviously take it the most tax-efficient way. So you want to take it from your buckets that are tax-deferred last, and you want to take it from your taxable first.
This sounds complicated. And, you know, it used to be so easy when you retired. You worked, 30, 40 years, and then you got a pension, and you lived on in the golden years.
Yes.
Most people are not good at saving and figuring out these buckets. So what is your advice?
My advice, I truly believe that everybody needs a financial plan, and they should at least seek somebody's guidance who's going to at least put them on track. If they are young, the sooner they start, the better. If you start in your 30s or 40s, that's a great time to start. 50s, 60s, it's okay as long as you're willing to work and get the numbers and see where they line up, and be realistic with your goals and see where you actually, if you can actually do what you want to do. If somebody's 50 years old and they want to retire at 60 and they have $500,000 and they spend $100,000 a year, it's not going to happen. So you have to make trade-offs and figure out what is the best way for you to reach your goals. And
I want to come back, Carrie, to something you just touched on, and that is when it comes time to start withdrawing money from my cluster of savings, which assets do I want to tap first? Which ones last? I think I heard you say save your tax advantage savings until last. Do I want to sell my stocks first, my bonds first? What?
Well, you really want to do it the most tax efficient way. So it really depends on your portfolio where you are in that cycle when you retire, because you could have a bunch of gains built up in your bonds or your stocks, but either way you want to take it out the most tax efficient way. Make sure you have long-term capital gains, make sure you have the lowest amount, and do a spread over time with the most tax advantage way to pull from each account.
All right, and that thing about taking it out in a spread, no lump sum payments, right?
No. When you take a retirement, when you retire from your company, you get a rollover, which is going to go directly into your IRA account, which is a non-taxable event. And then when you withdraw on it, then you get taxed at 100%. So you want to withdraw that money last, since it's 100% taxable. However, all your other money is already taxed. So you only get taxed on the gains.
Lots of great information. Thank you so much, Carrie. Carrie Carbonaro. She's financial advisor with United Capital Private Wealth Management.
And if your plan is to work longer to avoid outliving your savings, we'll show you how to do it on your terms tomorrow in the second part of our week-long series. And for more, head to our website, nbr.com.
And as long as you're there, we also want to hear from you on which stocks would you like our Market Monitor guests to discuss this Friday. Go to our website, nbr.com, click on the link, and don't forget to tell us where you're from. And that's Nightly Business Report for tonight. I'm Susie Garrow. Thanks for joining us.
And congratulations to Will and Kate. I'm Tyler Mathisen. Have a great evening, everybody. We'll see you back here tomorrow.
Nightly Business Report has been brought to you by sailing through the heart of historic cities and landscapes on a river. You get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
I'm Susie Garrow with a Nightly Business Report news brief. McDonald's saw profits rise over the past 3 months, but that was short of analyst expectations, and the company warned of a tough year ahead due to shaky economic conditions all over the globe. That weighed on the markets. The Dow rose almost 2 points, the Nasdaq up 12. The S&P added 3 points, though, to a new record close. After the market close, Netflix reported higher profit last quarter, but added fewer new subscribers than analysts expected and a weaker outlook. Shares tumbled in after-hours trading. But gold glittered, posting its biggest one-day gain in more than a year, jumping $43 an ounce to $1,332. And sales of existing homes fell more than 1% in June, but prices rose 13% from the year before. Be sure to tune in to Nightly Business Report right here on your public television station.